Welcome to the third video in the 1A chapter. And this one is about whether you work full-time or you're a student or you're retired, just what can you really do? So you may have already figured whether you want to be active or passive, but the fact of the matter is what you want to do may not suit your actual lifestyle. Whether you're a student and you're studying, or you're working full time, or you're enjoying your retirement and you don't have that time and energy anymore, you gotta think about even if you want to do something, the market doesn't care about you, the market doesn't care what your schedule looks like, but your strategy must, or you'll probably fail. The wrong fit is going to lead you to miss opportunities, get frustrated, you're going to be burnt out, you're going to have very, very poor execution. And at the end of the day, this game really isn't about what is exciting or what sounds fun. It's all about what makes money. So if you're a full-time worker and you work 9 to 5 or even longer, you're probably unable to watch markets all day. So with that being said, you probably shouldn't even think about day trading or scalping. Now, if you're overseas and you're of a different time zone, which does allow you to trade before or after work, even at least for a few hours, you do have that avenue, and I actually don't think it's a bad path. But it makes your working day considerably longer. And unlike long-term investing, day trading and scalping is like genuine work. Like you're actually working for your dollars. So it's definitely not a fun thing to do for a very, very long time if you're already doing a 9 to 5 on top of that. So what might be the better alternative? I would say swing trading, and long-term investing, because all you got to do when you're swing trading or long-term investing, even if you're an active person, is check like once a day and, think of a plan, determine your prices in advance. Like you don't need to look at it every second. You can just set your order to sell at a certain price, to buy at a certain price. It is good to check once a day to keep up with events that may be happening in your holdings, and to see intraday prices to see if you need to make a different decision. And sometimes, a selling strategy is not that easy to define. So you might want to check, once a day, just so you can make that decision on the fly rather than defining it at a fixed point. But yeah, you really don't need to do a huge amount of work. And I think with most people, even with a typical job, you have a lunch break, so you can probably just take a look then. It's nothing too crazy. But yeah, if you're a student, this is probably one of your best times to take advantage of your flexibility. And I don't necessarily mean your workload is not a lot, because it probably is a lot in some cases, and it could easily be more than a full-time worker's workload. But for example, if you're studying, you don't need to study while the market's open for the most part. You could just study while the market's closed. And unlike work where you have your boss and you have to perform to a certain extent, like nobody's going to be all over you for not doing your homework and for looking at your phone during class. Like your grades might suffer a bit, but it's not the end of the world. So you have the advantage of flexibility, and you can definitely explore. For the most part, when you're a student, you don't have too much commitments and your capital's small. So you have also typically a higher risk tolerance. This allows you to really learn, grow, and try new things that someone that's retired, for example, can't do, because they have large capital, they can't really afford to lose it, and they have people that depend on them. So as a student, you might want to paper trade, use any simulator like Investopedia to build some skills without risk. Although you won't build emotional knowledge with simulation, you can still try some strategy and figure some stuff out. While you're young, you can try a mix of swing trading and long-term investing. Although I will say it is pretty hard to try long-term investing because the idea of it is, you're in for at least a year, right? To truly be some sort of long-term investor. And to try that means, you have that year time coming at the very least. And you're really not going to know your results for many years. And you could have a lost decade where you tried it and you think it doesn't work before a very brilliant decade for long-term investing, or it could be the opposite. So it's pretty hard to try something where you might need 2 decades to see if it actually works. But yeah, don't underestimate the value of studying stuff, even if you're not in the trading phase yet, is an advice I'd give to people that are just getting started, because you'd be surprised how many people don't believe in certain stuff. For example, they believe the market's completely efficient, so you shouldn't study a financial statement, or they believe a chart is just senseless. Everybody can see charts. Why would it work? It's just like astrology or whatever. And there's people making a living off of not doubting these things. So for the most part, if you can open up your mind and actually take a look at these, it will do you good. And an analogy I'll give to both of those, right, is because financial statements or charts are the past, right? So some people will think, oh, it's the past, right? It's priced in, it doesn't matter. And thinking that the past doesn't matter is like the equivalent of a doctor taking your temperature, and you think that doesn't matter, so you think they shouldn't even bother taking your temperature when you're sick, Like, some things in the past are helpful for future decisions. Anyway, so if you're retired or semi-retired, typically speaking, this is it doesn't fit every case, but for the most part, you have more time, but you don't really have that willingness to take much risk, and you're probably richer, so you have a lot more to lose. So can you dividend invest or buy some sort of income generating ETFs or bonds? You certainly can. It's not necessarily a terrible idea, but it's pretty unfortunate to do that because you have probably the most time you've had in your life, and you might have wanted to be very active when you're young, but you just didn't have the time. And now you have all that time, but you're trying to play it safe and take less risk. So you're not even using your time by doing something dividend, like dividend ETFs or whatever. So it's not the best. Now, you could talk about long-term investing and be very conservative, and it makes sense to be somewhat conservative given large capital size and less time to make it back. But like, if you're young and you invest long-term, you can really change your life. If you're in your retirement, you don't have much savings, and you're talking about long-term investing, like, it just doesn't make that much sense because you don't have that much of a time frame. So I do believe that the best thing you could probably do is think pretty risk adverse, but still be an active trader. And some people will think those contradict each other, but activeness doesn't necessarily correspond to more risk. You might just be using all your free time to simply pick the highest quality and best stocks, and you can still limit your risk by diversifying. For example, the Dow Jones is pretty low risk, most people would agree. And there's only 30 stocks in that. If you have a lot of free time, I'm sure you can probably find 30 or so stocks of very high quality that can exceed the Dow's returns without taking that much risk. Now, you can also consider things with low beta, basically just slower movers, and invest in those and ensure they're high quality. But I do think when you're in your retirement, you have so much time that you may as well be active and really take control. But that doesn't mean go crazy and risk it all and lose your retirement money. But anyway, it's also about how much energy you have. Whatever age you're at, whatever commitments you have, it might even relate to health conditions. You got to think of your energy. Someone working 60 hours and then, for example, their job doesn't overlap, they may still feel very energized and ready to trade in the markets. That's no problem. If you're someone that's like that, you always have the energy, just go for it. But you might be retired and you have all this time, but you're just, you're sleepy all the time, your brain's foggy, you don't want any stress. Well, you can decide to just be very passive. It really depends on you. So don't force yourself to do something you shouldn't, and really just accept the lifestyle you have, accept who you are, and then adapt your strategy to match that. But anyway, that's all for this one.